Hey guys, what's up? Alec back with the daily stock market and a very interesting first full week of the new year. Now, next week we do have Martin Luther King Day coming up, so the stock market will be closed for that. Again, it will be a short week. But in this video, we're going to talk about some risky stocks to have your eye on in 2024 and some of just the most popular stocks that everyone wants me to talk about as well. So strap in, put your seatbelt on, like this video, share with a friend, subscribe on YouTube for all the full-length videos, and let's jump right into it. So the first stock that we have to talk about is Nvidia and AMD also, but Nvidia is more the talk of the town. Everyone wants to know what's going on with Nvidia. Is it a good time to buy? Is it going to keep going up? It's up 11% just in the past week, and it gets even worse. Nvidia up a staggering 236% in the past year. One of the best stocks for 2023 to be invested in. It was only $162 per share towards the beginning of the year, and now it's closer to $547 per share. So what's going to happen with Nvidia? What are my personal targets? Let's go into that. So personally, I think there is a strong support around $410, $408 per share. Okay, so I've price alert set at 408, 410, 450. So it alerts me when it goes that low. Other than that, dollar cost averaging into Nvidia is going to be the smartest idea for long-term investors. People to plan on holding for 5-10 years down the road and let Nvidia do its thing, dollar cost averaging. If you plan on holding less than 5 years, then staying away from Nvidia is probably the best idea right now because it is hyped up. It is up 236% in the past year, and that could definitely retrace again down to that $400 mark where we want to see it. However, there is no guarantee that it will retrace at all. Nvidia could just keep going higher and higher and higher, especially the way that it's been going. But in my personal opinion, I don't think it will for the next 2 years, the next 24 months. I think it kind of will balance out and stop going, making new all-time highs every single day and every single week, basically. Other than that, we have the market cap at $1.3 trillion. Okay, so it can't go much higher. $2 trillion would be absolutely absurd, and I think that would be probably around the cap of where we can see Nvidia over the next couple of years. We see a price-to-earning ratio of 72, which is actually not super overvalued considering how much Nvidia price has ran up. And the reason why we're seeing this extreme growth on the stock price is because look at their net income, look at their EPS, look at their earnings. In the last 3 quarters alone, we've seen it skyrocket. Seen approximately a 10x on earnings. Okay, it was at around 50 cents, $1 EPS, and now it's closer to $4, $4.50 on the EPS. Okay, so the next earnings is 2/21, which is February 21st. So it's going to be interesting to see where that EPS is. If it starts cooling off, expect a pullback. But if we see the EPS numbers just keep growing and growing and growing, then the pullback won't be justified, and we can see the stock keep continuing to climb and climb. So that's a big thing to watch when it comes to Nvidia stock is their earnings. Now let's switch it completely up and talk about a stock that's under $10 per share, a Chinese-based stock, an electric vehicle stock, and that's NIO, currently sitting at $7.18 per share, down 11% in the past week, so completely reversed from Nvidia. Down 14% in the last 3 months. They did spike to around $9 per share, $9.43, and that was around a 25-30% gain. Okay, so swing trades are viable on NIO stock. I think buying under $10 per share and swing trading back up to around $9 or $10 per share is a great chance for around a 20%, even a 15% to 30% swing trade on NIO stock. Okay, last year we saw it as high as $15 per share, which was closer to around 100% swing trade on NIO stock. Now, in my belief, I think that $9 per share, $10 per share could definitely happen in the next few months again, and it could spike up for a nice swing trade. But let's talk about the long term. What's going on with NIO? They were at $60 per share. Is there a possibility that NIO could even get to around $30 per share again? or is it just going to keep downtrending time and time again? So real quick, I do want to go over this article. We see NIO sees a more significant dip in the broader market. Some facts to know. The most recent trading session ended with NIO standing at $7.40, reflecting a barely anything shift from the previous trading day close. Okay, the company's shares have seen a decrease of less than 0.5% over the last month, not keeping up with auto tire truck gains from around 1% gains, and S&P 500 gains of nearly 4%. Okay, analysts and investors alike will be keeping a close eye on performance of NIO in their upcoming earnings disclosure. The company's earnings per share are projected to be negative 50 cents, reflecting a 1.9% increase from the same quarter of last year. Meanwhile, our latest consensus estimate is calling for revenues of $2.2 billion, which is down 1.8% from the prior year quarter. Investors might also notice recent changes to analyst estimates for NIO. These revisions help to show the ever-changing nature of the near-term business trends. As a result, upbeat changes in estimates indicate analysts' favorable outlook on the company's business health and profitability moving forward. Based on our research, we believe these stock revisions are directly related to near-term stock price movements. Investors can capitalize on this by using the ZAC ranking system. This model considers these estimate changes and provides a simple, actionable rating system. The system rates a number 1, which is a strong buying, out of 1 to 5, which is 5 is a strong sell. Possesses a remarkable history of outdoing externally audited, with number 1 stocks returning an average annual gain of around 25% since 1988. So I don't know how accurate that is. Take it with a grain of salt. But Yahoo and Zacks have been around for a while. But we could see that the Zacks consensus EPS estimate has moved 4.35% higher within the past month. Currently, NIO is carrying a Zacks rating rank of a number 2, which is a buy. And like I said, at $7 per share, I think it is a good price to start buying the stock or averaging your cost down, swing trading it, or even holding it for long term. We can also see that their EPS is all over the place, with huge misses and huge beats in the last 2 quarters, so a surprise for Q4 would not be abnormal. And if we want to dive into what analysts have to say about this stock in the last 3 months, we can see that they have around a $10.80 price target on NIO, which is around a 51% upside in the next 12 months. Remember, this stock is risky. This is a video about risky stocks. So there's no guarantee it will get to $10 per share. But if you're a risky investor, a risky trader, and you want to take a gamble, then NIO could be the stock for you. Let's see where these analysts are coming from. We have one 4-star analyst who is from Bank of America, which is implying a $9 price target on NIO in the next 12 months. We have a lot of other 1-star analysts. So definitely take what the analysts say on NIO stock with a grain of salt, because there's not many analysts, first of all, and a lot of the analysts who are putting their opinions on NIO stock are just 1-star analysts. And the last stock that we'll be talking about in the risky video is going to be Netflix at $492 per share, up 5% in the past month, up 38% in the past 3 months alone. So there could be a drop back down to $350 per share, or a pullback. Now, if we pull out to the last year, it's not ran up as much as some of these other stocks, up only 49% in the past year. So not a huge amount of movement compared to some of these high flyers. If we pull out to the last 5 years, the stock is only up 62%, which is an average of around 11% per year compounded over the last 5 years on average. Now, they did fly as high as $690 per share in October 2021, and then went off to fall off a cliff and go down around 71%. Holy cow, in just a span of around 6 to 7 to 8 months. Okay, so that was a horrible time for Netflix, but we're starting to see Netflix climb back slowly up 150% from all-time lows. And I think that Netflix is a stock that will make new all-time highs. It could take some time, could take 2 years, 3 years, 4 years, 5 years to see Netflix back at $650 per share, but I definitely think it will happen. And from the current stock price of $490 per share to the all-time high of $690 per share, that's only a 40% increase needed on Netflix stock to regain that all-time high. And considering in the last year they're up 50%, in the last 2 years they're up around 150%, there's a very strong chance in the next couple years moving forward that Netflix could continue as high as $690 per share once again, especially if they keep continuing to grow subscribers and grow net income and grow revenue also. Those are the three things that you really want to be watching out for Netflix stock. And as a Netflix investor, the PE ratio is 49, implying it is overvalued compared to the rest of S&P 500. However, it does have a moat that other companies don't have and a competitive, durable advantage. So you definitely have to take that into consideration. Some bullish things that this analyst Morningstar commented on January 5th. Netflix has significant room to grow in international markets where it has already shown promise with local content, which is very true. Ad-based supported subscriptions will open Netflix to a new base of subscribers and potentially substantial new source of revenue. Netflix has already created so many hit shows that are exclusively available on its platform and has attracted a massive customer base. The firm's advantage in cash generation versus competitors makes it more likely this virtuous cycle can continue, with Netflix creating more content that attracts and holds its subscribers, which is true. If people could pick one streaming service, Netflix, Hulu, Max, Peacock, and a few others you could throw in there, also Disney Plus, most people, probably around 75% or more, are going to typically choose Netflix if they only have to pick one. It's because they've done so well with their content. So if they can maintain that and keep growing, that's going to be phenomenal for the company. So it's something to at least have on your watch list if you're not invested in them yet. Okay, put some price alerts for a pullback. Again, I want to see them under $400 per share. I think it is possible. They just recently had a huge run up. So now is probably not the time to be buying them when they're up 38% in the past 3 months. Again, wait for that pullback. Dollar cost averaging is obviously going to be the best thing, but also tracking the stock is going to be good and seeing how it performs if it continues this bullish pattern and the growth, this huge growth cycle that it's on, could be a good thing to start investing. But if you're not investing in Netflix, it's at least worth it to have on your watch list. One more bullish thing I'll touch on Netflix is that they also haven't even touched the gaming sector at all really yet. I know they're starting to dabble with it. So if they figure out how to monetize gaming and get revenue from gaming, also, that could be a huge bullish thing for Netflix as well. Now let's take a peek at what analysts have to say about Netflix over the next 12 months. Now, on average, they agree that in the next 12 months, the price is basically going to be unchanged. It's going to be around $490 per share, okay? But some analysts have a huge downside, while other analysts only have a small upside. So it could be a stock that's really not worth the risk and reward at the current price point. But if it drops under $400 per share to closer to $350, then the conversation could start changing a lot. And again, make sure you're subscribed with post notifications on, because if Netflix does drop under $400 per share, we'll do an updated video on this stock. Now, this one, you could take less of a grain of salt when it comes to the analysts, because they're a lot more active. Look at this: 2 days ago, 3 days ago, 5 days ago, 6 days ago, 10 days ago, and they're all 4 or 5 star analysts from respectable places. Okay, the first one was 2 days ago with a $600 price target from a 5-star analyst, and he has a success rate of around 50%. Okay, which is actually really good. We have Jason with a city analyst, 4.5-star analyst, and he says $500 on Netflix, $565 for the next one, $566, $575. So the recent 5-star analysts, they all look like they are above $500 per share, which is a really good sign for Netflix, especially if it drops under under $400 per share. Once again, could be a nice buying opportunity. Thank you guys for making it to the very end of the video. And if you did, just make sure you slap a subscribe on YouTube so you're notified when new videos come out. Like this video and share it with a friend. If you want to join my close friends list on my stock market family, where I post what I'm buying, what I'm selling, swing trades, option trades, make sure you message me at the Daily Stock Market on Instagram with over 222,000 followers, 866 posts. Click on success number 9 or success number 8 or 7, 6, 5, 4, 3, whatever you want. But 9 is the most recent on the highlight section of my Instagram. And you can see all this life-changing testimonials that have happened with my group. So if you want to become a stock market professional and a stock market advanced trader, make sure you reach out to me. I have a few more spots that I want to fill for 2024. So I'm just taking a few more people that want to take their stock market trading to the next level and make 2024 their year of stock market success. So read through some of those testimonials, DM me on Instagram, and we'll go ahead and get you started. Other than that, thank you guys for tuning in, and I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.